Well, another volatile trading session, even though oil is up slightly, which, if history is any indication, is good for stocks. China's benchmark stock index plunging over 6% on Tuesday, sparking a sell-off in stocks across the globe. I'm joined now by Michael Hewson, the chief market analyst at CMC Markets in London. And Michael, what happened here? We've got stocks in China falling to a 13-month low, but oil is up slightly. I mean, if it's not one thing, it's the other.
Yeah, I mean, I think what we can say from the events of the last few days is that I think the norm now is for price swings in the oil price around about 5 or 6%, and I think that's probably the shape of things to come. But I think there is some evidence that I think we could be starting to try and find a base in the oil price. We did dip below $30 a barrel once again today, and we were down quite significantly, around about 5%, but we haven't as yet given back the gains that we saw at the end of last week. And I think if we're unable to follow through on this selling pressure, there has been some vague talk or vague chatter that some big OPEC producers are talking about potentially doing a deal with Russia. I'll see that when I believe it. But ultimately, I think that is helping support the oil price, as is, I think, an expectation that we might see a little bit of a dovish Fed tomorrow.
All right, we'll talk about the Federal Reserve in a moment, but do you think $30 is a realistic stabilization level for oil? We've seen it at 26 last week, then 29. Of course, it's been fluctuating between 29 and 31 for quite a few days.
To be quite honest, Scott, yes, I do. I do think it's a fairly good stabilization level for the oil price. You need to put this into context. From the highs in 2014, we're still over 70% down. From the highs in 2015, we're still over 50% down. So you've got to ask yourself, how much of this is already in the price? In addition to the fact we're at peak bearishness at the moment, we've got investment bankers tripping over themselves to revise down their forecasts for crude oil, with $15 a barrel, $10 a barrel. That for me suggests that we could be close to a base.
Yeah, and there was one point last fall where the analysts had $20 and everyone was shocked. I want to talk about the Federal Reserve. Of course, we have the statement released on Wednesday. Now, they have a key opportunity to calm markets, even though that's not exactly the purpose of the Fed. What do you think they're going to say, and what should they say?
Well, I think they would have been surprised by the fact that 1 month or just over 6 weeks after they raised rates, the US dollar is 2% higher than it was when they actually took that action. And I think that's going to be a big problem. Earlier this month, James Bullard, who, I hasten to add, was one of the key protagonists in arguing for higher rates, is now going back on that a little bit. He's expressed concern about future inflation expectations. If you look at the US 5-year
right,
for inflation expectations, that's declining. And I think tomorrow, the Fed is going to have to be very, very careful about moderating its language with respect to the amount of rate rises we can expect this year. The hawkish rhetoric that we heard at the beginning of the year of 3 or 4, I really don't think that's going to happen, and I think they need to dial back on that.
All right, and very quickly, where are you putting money to work right now in these volatile times?
Well, at the moment, I'm seeing a lot of evidence that essentially people are putting money back into cash. But one other thing that I have been looking at is in the currency markets. And in the currency markets, there does seem to be some evidence that the Canadian dollar and the Norwegian krona may well be looking to bottom out and maybe stage a little bit of a recovery. So I certainly think maybe look at some of the beaten down stocks in those particular markets.
All right, Michael Hewson from CMC Markets in London. Michael, thanks for joining us as always.
Thank you.
I'm Scott Gamm, and you're watching The Street.